Hi, good evening, traders. This is Robert from FXpressor, and I hope everyone had an awesome tree planting day here in Kenya. And so today we are going to have a look at a few setups over here. And basically the topic today is all about using the 50-200 EMA Cross to identify and enter trades. And I hope we'll have a fruitful session. So let's have a look at this. So let's see what we'll be learning. And basically, guys, make sure that you understand that what we'll be using today is something that you can use on your trades. So using the 50-200 EMA cross to identify trades. So what is the 50 and the 200 EMA? So the 50 EMA refers to the 50 period exponential moving average. The 200 EMA refers to the 200 period exponential moving average. They provide more weight to recent prices, which allows them to react more quickly to price changes than the respective simple moving averages, SMA. So basically what you're saying here, EMAs have better signals as compared to the simple moving averages, the SMA. And so most traders tend to go for the EMAs rather than the SMAs. So let's look at the roles of the 50-200 moving averages. So one, they help in trend identification. So the 50 and the 200 EMAs help in identifying the direction of the market trend. When the price of a currency pair is moving above the moving averages, it suggests an uptrend. Conversely, if the price is below the moving averages, it suggests a downtrend. So I think this is self-explanatory, but then again, we'll have a look at the charts to see what it means by this. So basically, if the price is above the 50, then of course we have that uptrend, and then if the price is below 200, then we have that downtrend. So the steeper the slope of the EMAs, the stronger the trend. So if the EMAs are so steep that let's say the direction is downwards, then it means the trend is the market is so bearish, and the reverse is true. So how else do we get to use the 50 and the 200 moving averages? Support and resistance. The 50 and the 200 EMAs can also serve as dynamic support and resistance levels. In an uptrend, the EMAs can act as support levels, while where prices might bounce off, while in a downtrend, they can act as resistance levels. So the moving averages, they'll definitely be acting as areas where when price gets to the moving average, you can see a certain reaction in that particular asset. So they're moving, yeah. So this is something we'll have a look at in a few. And then also there's the crossover strategy to enter the market. The cross of the 50-200 EMAs generates either a bullish or a bearish signal. When the 50 EMA crosses above the 200 EMA, it gives a bullish signal. Conversely, when the 50 EMA crosses below the 200 EMA, it gives a bearish signal. So this is straightforward, but then again, it's better to have the practical part of this so that we can have a better understanding of this. So traders, it's always important to understand that moving averages, they are lagging indicators. That means that you shouldn't rely on the moving averages by themselves. Yeah, so they'll just help in identifying some of these moves, but then again, you should have other strings of confirmations. Yeah. So let's look at something called the golden cross and the death cross. So the golden cross bullish, this occurs when the 50 EMA crosses above the 200 EMA, suggesting a potential shift from the downtrend to an uptrend. Traders may interpret this as a bullish signal. And then of course there's the death cross, which is bearish. This occurs when the 50 EMA crosses below the 200 EMA, indicating a potential transition from an uptrend to a downtrend. Traders may see this as a bearish signal. So let's look at examples, and first of all, we'll have to insert the 50 and the 200 EMAs. So let's go to my charts. Hello, actually. Hope we have other viewers on this session. So let's look at our MT5. Awesome. I believe everyone can see my MT5. So let's have a look at maybe Euro USD. First, let's install the 50 and the 200 EMAs. So what do? Go to the top left, insert, go to indicators, and then these are trend indicators. Go to moving average. Let's do the 50 exponential, close, and then maybe we can choose a blue color and then say okay. So we can see now we have the 50 EMA on the chart, and then let's now install the 200 moving average. So moving average, select that to be 200 period, and then maybe since my screen is black, then we should probably go for white, and then okay. So there's something we've said with regard to the moving averages acting as moving support and resistance. So clearly on Euro USD, we can see from Friday, the 200 moving average here is acting as support. So sellers were coming in strong, then they encountered the 200 moving average. Price did bounce, and then look at that. When price got to the 50 EMA, there was that rejection again. Here the 50 EMA is acting as resistance, so sellers came in and countered the buyers, the 200 EMA, and then we can see price push up. So today is when price came to the 200 EMA, and then we can see price rise almost 30 pips. Yeah, 30-40 pips on that particular asset. So we've just installed the 50 and the 200 EMA. So let's look at the cross, yeah, and see how that translates into opportunities for us as traders. So we've said when there's a cross, for example, what you can see here, we can see this cross over here, right? Where the 50 crossed over the 200 EMA. We've said when we have this, then it will be a potential bullish moves. And we can see that is literally what happened. That bullish move that happened until sometime on Thursday, Friday, where there was that push to the moving average, the 200, and then found support, and then we can see price push up. So this would have been a signal for you to enter a buy into this market. So a retracement would have been a better entry level would have been if this price got to the 50 EMA. Then that could have been a better area for you to enter a buy position. So as traders, these are things that we should always try and seek. Remember, at the end of the day, we are looking for an edge, yeah? Something that will give you an overall, basically an overall better reason as to why you should enter and even exit. So there are times you can use them. Look, if you look at on H4, that was H1. Yeah? If you look at H4, sorry, we can see the 50 EMA here acting as support. But then again, we can see this golden cross over here once again, where the 50 and the 200 cross, and then we can see that bullish. So we should expect, based on this, that the market should be bullish. We should see an upward move on Euro USD. Maybe to a test of this particular price level, maybe last week's high, maybe to that particular price level before maybe a downward trend. So the crosses are really useful when it comes to identifying opportunities for you to enter or even exit a particular market. Now, let's go to H1. So the other thing we can look at is maybe indices, the UT100. This is the NASDAQ, right? So here we are talking about the Facebooks. It's a basket of tech companies, 100 tech companies: Facebook, Meta, which is Meta, Netflix, Alibaba, Amazon, Tesla, Alphabet, the parent company, parent holding company of Google. And so if you look at this again, we can see two particular areas. Let's start off from our left, 6th October. We can see this cross. We can see this cross over here, the 50-200 cross, and then we can see an uptrend. This is what I was saying. If the market comes back to the 50 EMA, in this case, the blue EMA over here, it will give a better signal for you to enter that market, right? And we can see clearly that would have been a better signal. So you can see the market retrace to the 50, and then we can see that uptrend. So in this case, we've said when the price is above the 50 EMA, then it shows an upward trend. So we can see clearly that is what transpired over here. Now, if we go now to 18th, I believe 19th, sorry, we can see another cross over here. So the 50-200 cross, and then we can see, we've said when the 50 crosses below the 200 EMA, then it signals a bearish move, yeah? So we can see the market did push down, but then again, a better entry would have been now on either the 50 EMA or now the 200 EMA. And remember, there are times when people will use also the moving averages as area to set out their stop loss. So you'll see some traders in such a particular case setting out their stop loss above the 200 EMA. So we can see the 200 EMA here acting as resistance. Price came to this particular price level, and then now we can see the downtrend. So every time there was push towards the upside, we can see some kind of a resistance over here, but then again, the better resistance was on the 200 EMA. So this would have been a potential area of entry. So this was a potential area to sell, and also this one could have been a potential area to sell. So we can see that downtrend until, of course, we had that reversal. And then, of course, look at that, another cross. So, sorry. We can see this golden cross. So the 50 crossed over the 200 EMA. We've said when you see this, it gives a potential bullish move. And then we can see that bullish move happen all the way up until where we are. So we can comfortably say this upward trend could have been as a result of this golden cross over here. And then clearly we can see now the 50 EMA here acting as support. We can see price get to the moving average. We can see the price bounce and then get to where we are currently. So that is NASDAQ, an index. So let's look at a stock. Let's probably look at Microsoft. So we can see Microsoft. If we look at this particular asset, we can see price going through the 200. There was that breach to the downside. But then again, my focus is more on these areas where we had crosses. So we can see this cross, the 50-200 cross over here, which led to this uptrend over here, right? So this cross gave a bullish signal, and a better entry would have been the market coming back to test the moving average. So we've said that the moving averages, they also act as moving support and resistance. So in this case, the 50 EMA is acting as support. So anytime price gets to the 50 moving average, you can see a bounce up, right? So that is another example on Microsoft. let's look at now maybe a currency, another currency over here. Maybe let's look at BTC, cryptocurrency. So I should have saved that template. Let me go back to Euro USD. Or for the sake of people who didn't understand how you install the 50 and the 200 EMA, I'll do it afresh. So let me go to insert, go to indicators, go to trend, and then moving average. So here we will do the 200 exponential, close, the color will be white, and then say okay. Right now on our chart, it's naked. That means there's no indicator. So when we say okay, we should see a white line. So this is the 200 moving average. Now let's install the 50 EMA, indicator, trend, moving average, 50, exponential, color, we'll choose blue, and then say okay. So we can see the blue, the 50 EMA. So let's go to H1. So we can see price moving on the 50 EMA. You know, if you look at what happened on 9th November over here, we can see the 50 EMA acting as, we can see the 50 EMA here acting as an area of support, right? So sellers came in strongly, but then they encountered the 50 EMA. And what happened is that we can see buyers come in. And then today we can see here the 50 EMA acting as resistance, which could probably be as the result of, the result to this is that we can see sellers come in. So let's look at crosses. Let's see whether we can identify a cross that probably gave us signal to buy or some. We can see one over here. So we can see the 50 EMA cross over the 200 EMA. The first crossover was, of course, on a downward move towards the downside, and then the market was bearish, and then we can see it cross above the 200 EMA. And we can see, but once we've seen this, then as a trader, we should be looking for opportunities to buy. But then again, a better entry will be when market comes to the 50 EMA or the 200 EMA. So in this case, we can see price over here came to the 200 EMA and the 50 EMA. And so after that, we can see buyers coming strong from that particular price level. So we can comfortably say that this bullish trend is as a result of this cross, the 50-200 cross that signal a bullish momentum. So that is a great example on BTC. And let's look at H4. Maybe we could see the market retrace to the 50 EMA over here, and then maybe continue with the upward move. So this could be a possible outlook on this particular asset to the 50 EMA, and then maybe we could see a continuation of the bull run on Bitcoin, maybe to test last week's high. So that is a possible outlook on this particular cryptocurrency. So let's look at gold. Awesome. We can actually see a crossover here. So this was on 7th November. So this crossover here, when the 50 EMA crossed below the 200 EMA, it signals a downtrend, and clearly we can see this market has been on a downtrend. So at times, if you feel that you really can't see that downtrend, change your chart into a line chart. So a line chart will give you that downtrend pretty well. So this push to the downside, so this push to today's low is as a result of that particular crossover there. So that will be an example of how you should probably be using the 50 and the 200 cross to identify areas. Also, we've said that the 50, 200, they act as support and resistance areas. So anytime there's that encounter with the 50 or the 200 EMA, we could see a potential reversal of the market. So maybe let's look at some questions that you could be having. Hello, Tom. Anyone with a question? Okay, so it seems we don't have any question. So kindly have a look at that presentation, get to see how the 50 and the 200 is useful in identifying these potential areas, buy and sell areas. And with that, you should be able to look for those opportunities to buy or even sell, depending on the outlook. What about the 800 EMA? Thank you, Edward Onyango. That is also another tool. Thank you. I should probably do a video on that, right? And also Pashwa, you're also asking about the 800 EMA. Yes, I should probably also do, probably I can do a presentation on now the 50, 200 and the 800 in my next session, if that's okay with you guys, because it seems like you guys are asking for that. So yeah, we should do the 800 in our next session, so that we can wrap them up, the 50, the 200, and the 800. Any other question? Or even maybe a suggestion? So let me do a recap on the same. Get to know why we have these. They help in identifying the trend. So if price is above the 50, then it's an uptrend. If it's below, then it's a downtrend. And then we've seen support and resistance. The 50 and the 200 can act as dynamic support and resistance. Remember, it's dynamic because it's not constant. It's not static. The moving averages will be moving just like the word moving. And we've looked at the crossover strategies, and then we've looked at the chart examples. We've seen how to install. And that's it, guys. Maybe I should see if there are questions. The analysis applied. Yes, Eunice, yes, the analysis will apply on all pairs. I think we've done a presentation of actually not just pairs. We've looked at different assets. We've looked at stocks. We've looked at indices. We've looked at currency pairs, and even we've looked at cryptocurrencies. So yeah, it will apply on almost every other asset. How do you determine the MA to use in terms of timelines? So when you install the 50 and the 200 DMA, it will be across board. It will appear in all time frames, right? From the 1 minute to the daily. So this is where I'm saying in trading, this shouldn't be the only reason as to why you're taking trade. So today, the main thing we were looking at is the 50 and the 200 and how they are able to give you potential areas of buying or selling. So in our next analysis, we look at now another maybe indicator, an oscillator that helps in now giving you a better analysis on it. If I were to, let me just cover something kidogo for the sake of Paul. Let me go back to my chart and share something. There's an oscillator called the RSI. There's an oscillator called the RSI. Now, let's look at maybe a currency. I'm trying to look at an area where the The RSI is shooting an overbought area, and the moving average is giving the same. Okay, so let's see on my left. So an oscillator, for example, if you look at this trade over here on gold, if this trade moves to this moving average, there's a potential resistance over here, courtesy of the 200 moving average. At the bottom here, we can see something called the RSI that has at the 70 mark over here. The 70 mark over here represents an overbought region. So if this trade gets to this particular price level, there's a potential sell trade that could appear here. So these two confirmations, when you have two confirmations, then it gives you a better reason as to where you should enter trades. This is something I look forward to cover in my next session. So where we'll cover the 50, the 200, 800, and then we have an RSI and see how that would probably give us better confluences and reasons as to why we should enter, buy or sell. Yeah, I hope stay tuned. Make sure that that presentation will be there. What time frame is the crossover most significant for day traders to find confirmation of entries? So if you see the crossover, let's say on 1 hour or even M15 or even an M30, you should probably go to, if let's say you've seen the crossover on the H1, right? You should probably go to M15 to look for opportunities to buy. If the 50 has crossed above the 200. If it has crossed below the 200, of course, now you should start looking for opportunities to sell. I've answered your question, Richie. Okay, any other question? So if you guys don't have a question, then I should say thank you guys for attending. I know today we had a tree planting exercise, so thank you for everyone who participated in that. Otherwise, cheers guys, have a great evening and make sure that you attend the physical classes in our satellite offices, and that will be your way of learning firsthand from our experienced team. Yeah. Okay, guys. Okay, not yet. Sorry, I have realized there's some questions. How can I use the EMA to find targets and stop losses? Moreidi, let me show you. I've talked about this, but then again, let me just go back to it. So, for example, if you're looking at, if probably you're buying gold right now, then probably you can look for opportunities to exit at the 200 EMA. So in this case, the 200 EMA will be acting as a take profit area. Now, if the price is rising, then you should probably set out a stop loss below the 50 EMA. That will be an area where you could set out your stop loss. So for example, if you look at this trade, yeah, we can see the 50 EMA acting as a resistance here. So you could easily have set out a stop loss maybe at the Asian high. What's the Asian high? The highest price during Asian session. So let's mark this up. That could be a potential area where you could set out your stop loss. I hope I've answered that question. Now, if you look at such a trade, we can see there's the 50 EMA looks like it wants to cross the the 200 EMA. In that case, if that happens, then we should be looking for opportunities to start selling, right? So that will be something that you should look at, but then again, shouldn't be the only reason. And this is why I was saying in our next topic, we'll look at the RSI that helps better define some of these setups. Moredi, thank you. Richie, thank you. How to install the RSI? Edward, can you allow me to cover this next time? Because this is a totally different topic that I don't want to go ahead of myself, if that's okay with you. Let's do this next time, guys, so that I can have that, we can install the RSI and cover it in details. So that now we can combine everything. So look out for that particular topic, how to identify trades using the EMAs and the RSI. Awesome, awesome, Edward. Okay, guys, thank you for attending this session. Looking forward to hosting this session. Also tomorrow you have Rufus Market Snapshot. Make sure at 11 you get to know about that. Okay, bye-bye, guys. Have a peaceful week.